Welcome to this video. Today I'm going to be doing a stock analysis on Chipotle. Now if you like this video, please don't forget to leave a like and subscribe, and of course remember this isn't financial advice, this is purely entertainment and educational purposes. Now Chipotle, what is Chipotle? You probably know it is a fast food restaurant and they sell Mexican and Tex-Mex food. And it is quite an interesting stock, I personally think, and the reason I think that is because I think it is quite cheap at the moment compared to where it should be trading at. So as you can see earlier in the year, as you can see in late last year, it was all the way up in 66, and currently we are trading at 52. So we're down quite a bit from the top there. And as you can see also in the mid of 24, it was up almost up in 70. So for a fast food stock, actually, this is quite volatile. We rarely see this in stocks like McDonald's or Burger King or Wendy's. But of course, we did also see a stock split 1 to 50, which is quite crazy. But this is quite great also because this means there will be more volume in the stock. So let's say that you had a stock that was priced at $50 and then you made a stock split for 1 to 50. This means that now you get 50 stocks at $1 a share. You might think, well, that's bad because now my stocks are worth less. Technically, each stock is worth less, yep, but there's going to be more volume then because more people can trade it. So let's say someone who doesn't have that much money wants to trade it, maybe a retail investor like you probably are yourself. Well, they can get in, and other companies that chances are they want to buy more stocks at a lower volume price because then they can more easily get out because the percentage of their portfolio will be easier to manage when the stock price of each stock is lower. So that is quite simple. Now, overall, as you can see, it has risen quite nicely, as you can see down in the graph, ever since 22 and earlier 22. As you can see, it was all the way back down here in 24. So it has actually more than doubled from that point. At one point, even tripled. So currently we are sitting also in quite a nice technical area, as you can see right here. We do have some upper RSI levels here, and if you don't know what RSI is, that is your relative strength index. So if it's above 50 but below 70, this means it's in the upper channel. And this means it's trading upwards. If it's below 50 and above 30, it's in the lower channel, as you can see here, and then would be trading downwards. And if it spikes in either sides, this down here below 30 is oversold, and above 70 is overbought. So we did see a few peaks and valleys here, but we are currently trading in the middle of the. As you can see, we are trading right around 60, which is very, very nice. Now the earnings, as you can see here, they are quite great. They beat them by a small amount, and I do love when they beat them just by a little bit. And you might be thinking, well, why don't you want to beat them by more? Well, if they only beat them by a little amount, this means that they have quite a nice understanding of how much money they are going to make, and they're not going to estimate too low or too high. Sometimes when a company gives their earnings, well, actually every time they give their earnings, they also give their guidance. So this guidance is how much money they expect to earn next time. And you might think, okay, they expect to make $1 per share next quarter. And they say, oh, we only expect to make 80 cents. And you will think, and then you're going to be underwhelmed, and maybe you're going to sell the stock because you don't think they're going to perform that great. And so many other analysts. And then they go out and they earn $1.10 a share, and the stock's going to boom. I don't like it when companies does that because this just means that the volatility is higher and there's just poor investor relations, in my opinion at least. Now, they don't pay out any dividends at all, and I don't think they are going to do that in the future just because recently they did do a stock split. The chances are they're going to do something like paying out dividends is a bit smaller, and because I know that they are buying up some of their own stocks at the moment, which is great because this means there's a less stocks in the market, so less flow, which means that each share that is then bought afterwards is going to be more worth more. Now, their income statement, as you can see down here, it is quite a nice margin raise every single time, and they rake in billions of dollars now, and not millions. Now they rake in billions. So it has just been increasing year over year, and they are gaining more and more customers and stealing them from companies like McDonald's and Burger King, which are actually going down in customers, especially McDonald's, after McDonald's has increased their prices by a lot, and Chipotle just has a very renowned customer base, and it is very, very nice to see. And you can see down here, food is all they do. As you can see over here, it's called Mexican food restaurant, but that is simply because in their earnings they changed the names. So it is food and beverages. They make a little on delivery services, but that is not really something that is, as you can see here, 60 million, 66 million, but food and beverages is 11 billion. So not really anything interesting at the moment, but maybe in the future they are gonna do that more, but I doubt it as we have companies like Uber Eats and DoorDash and what have you not. Now the seasonals for this stock, as you can see, if we go all the way back to 2006 when they were first publicly traded, it has been a great stock for most years. We have several with more than 100% and quite a lot with nice double-digit gains. And then we also have, of course, have some years with poor gains, as you can see down here. But the worst one is 2008, of course, in the financial crisis. Not that great. Then we have 2000, but then again, we have a year like 2006, the year they were publicly traded. They were up by almost 30%, which was great. So, of course, we do have some years with huge losses, but more often than not, we do see great, great, great returns. So even if you bought it and you lose 12, 15%, chances are, if you just hold it, if if it repeats the pattern it does, it has proven it does, you're gonna make money in the end. Now the technical list, as you can see for the day, it is a buy, and for the month it is still a buy. And of course, I said that shouldn't surprise you. We are trending upwards. We have a golden cross. Everything is looking nice. And if you don't know what a golden cross is, that is when the short-term upwards momentum is higher than the long-term, which means the chances are we are going to be trading more upwards in the future. Now the analyst rating on this are quite nice. As you can see, we have 36, 22 on strong buy, 3 buy, and 11 hold. So very, very nice at the moment. I think this is quite decent. It would not surprise me if it wouldn't be above the maximum here. And that might be crazy, but it would not surprise me at all. We have seen quite crazy stock years these past years, and I don't think this year is anything different than that, given everything that Donald Trump says about tariffs and whatnot. But something that people don't want or miss is fast food. That's because, say that the inflation rises and you want to eat out less, well, you are going to ditch restaurants, and not fast food places. So they more often than not do quite well in recessions because people still want that feeling of eating out. So I do think Chipotle is a very, very nice bet on that. You can also just see down here in the annual earnings, they are slowly but surely just increasing and increasing and increasing, which is very, very nice. So I do think it is a great company. And it would not surprise me if they do a stock split again in the future. Of course, they're not going to do one now, as they did one in the middle of last year, which is almost a year ago today. But give it 3 years, 3 to 4 years, maybe they're going to do one again because chances are this stock is going to be trading in maybe 200. It would not surprise me if it goes to 200, maybe 180, 200 within the next 3 to 4 years. Now, if you did like this video, please don't forget to leave a like and subscribe. And of course, remember, if you want me to make videos on any other topics or any other companies, please leave them in the comment section below.